Hey folks, Andrew Packer here. Welcome to Trading Tips. Now, most of the time when we look at chart patterns, we're just sort of following a line chart where we see data point, data point, data point. So if you had a stock that went from 30 to 31 to 32, you'd say, hey, this is great. It's going up in a straight line. But the fact of the matter is, this doesn't tell you all of the data that you necessarily need to know as an investor to get an idea of what's going on. And that's because these lines are usually determined by the end price at the end of the day when the markets close. And you might also get line charts where over a longer time period someone's looking at the weekly close or even the monthly close to give you sort of a broader big picture return. But as a trader, knowing the difference between, hey, it keeps closing higher versus, hey, during the day it's doing just a lot of really crazy moves, that's a very important thing to know. And that's why a lot of traders use candlestick charts. This is a data point that just tells us here's where the bulk of the movement was made during the day, and it tells us if there might have been an extreme move higher or an extreme move lower, which is where it gets the name candlestick. And the beautiful thing about candlesticks is it can give us a different set of chart patterns that we can look at and follow, especially for shorter term trades. So instead of having a continuation pattern, which just looks like a bunch of squiggly lines with a range at the top and the bottom, you might have a series of candlesticks that just tells you what's going on and essentially conveying the same information. But you might see here it's trading a little narrower, here it's trading a little wider, here it sort of trades higher overall, here it trades a little lower overall, but it still sets that same continuation pattern where it's just in this tight range. And you might also have a situation where between one day and the next you have a wide trade and then it trades sort of lower. And then there's this break where nothing really has happened price-wise between the low on this day, for example, and the high and the low on this day. Or you might have another day where it's like this. When you have these situations, you have what are called gaps. You don't see these gaps when you're looking at the straight line, but you can see them when you're looking at a candlestick chart pattern. And that gives us some great short-term trading opportunities. Now, most of the time when you see gaps going on, whether it's something like here or here, this is just called a common gap. It's a very naturally occurring situation, especially when you have a series of kind of tight trading ranges like this. But what happens when things start to change a bit? What happens when things go out of the range and get bullish? Well, once we get out of the range, suddenly you have what are called breakout gaps, where it's moving higher, substantially higher, and outside where it was trading before. So now you're setting a new pattern. And this is a critical moment and sort of make or break. And if you're a short-term investor, say in the Forex market, this might be the result of a central bank coming out and deciding, hey, we're going to, change our interest rate policy. That causes a sudden change in sentiment and move. If you were looking at a common stock, for example, Apple used to be the poster child for these types of breakout moves whenever its CEO would be speaking at a tech conference and announcing a hot new product. So just like how on a straight line pattern, you can just kind of get that breakout move, you can get that with these candlestick ones as well. And usually what happens is once you get a good uptrend going, you'll continue to set higher highs, and you'll have more gaps as well along the way. And these gaps are called runaway gaps. It tells us that we're going to see this uptrend continue very strongly for a prolonged period of time. And that's a great bullish signal to keep investing, to stay long. And these gaps can occur in periods as short as a few minutes if you're a Forex trader. It can be a few weeks or months if you're a stock investor. But once that run is going, that's just much like the continuation or confirmation trend that we've seen with more of a straight line chart pattern. Now, there is one big warning signal, though, however, which is after one of these big gaps higher, say from here to here, suddenly if you have a very narrow candlestick, after a big gap, you'll start to see the fact that, a lot of traders are expecting this trade to have played out fully. And very much from here, it's likely to start showing signs of a breakdown going into a decline. This is what's called an exhaustion gap. It's what happens when things have moved up so much so quickly that everyone who wants to be in the trade is in it. A lot of folks who were in this trade earlier, maybe even as far back as this continuation trend, I've just decided, hey, you know what? I've had enough. I want out. it's time to sell off, and it becomes a self-fulfilling prophecy, and you'll start to see a breakdown. But again, you're not necessarily going to get this data specifically when you're just looking at things from a straight line. Having the candlestick patterns gives you the opportunity to see these gaps that occur in between trading, and it also gives you a lot better detail in terms of how things are trading, throughout the day, whether there's extreme moves that form the so-called candlestick pattern, or whether most of the trades are just sort of in a tight range. And when you start to see some of these bigger moves and you start to see some of the gaps higher, then you know you've got an opportunity to invest and make some profits along the way. And the best part about this is that it works much better for shorter term trades with your Forex as opposed to your stock trades or anything else. So this is a very different way of looking at chart patterns compared to traditional straight lines, but it's an incredibly profitable one, especially if you're looking to do more short-term trades, if you're looking to do more trades in the Forex space. So that will wrap things up for this edition of Trading Tips. I'm Andrew Packer, wishing you good trading and good financial health.